Hello, today is the 16th of March 2011. Thank you for tuning in to today's Silver Log, and we'll look over some silver analysis. I'd like to first point out that I will be once again on the Collector's Coach with Jack DeAngelis' radio show. Tonight, the radio show begins at 8 o'clock p.m. Eastern Time. I should be on there between 9 to 9:30 Eastern Time. Now, before we get started within the daily chart, what I have on the screen is some statistics, which is the lows and highs from last summer's lows, roughly around June, July timeframe, and the most recent highs, for the most part, placed within the last few weeks, and how much of the gains several of these markets and indices have given back. And silver, at least when it was 34.30 about an hour and a half ago when I did this, had given back 11.8 percent of its rally, and only heating oil from the names listed on this list has given back less. As gold has given back 18%, the Dow Jones the index is about a quarter, platinum 42%, palladium 35. So it's really interesting because if you look back, you'll see how almost all the markets bottomed last summer, and it looks as if that the markets just want to try this whole rolling over sort of deal. But within this daily chart, the trend, obviously, for the intermediate term, it's in a short-term downward trend. This trend line in here, obviously, I was stating yesterday that we broke below it, but there's only one candle. We're coming close to a confirmation break below, but this in itself doesn't do it because really it's got to break below this 34 and hold below it for more than a few hours for me to say that this trend is pretty much that of a lost trend. Now, as far as where we can find some significant Fibonacci retracement, what I have here is a calculator. Now, the lowest of lows is $17.74 approximately, and this is the lowest from last year, from that breakout period on the 24th of August. Therefore, the significant level here would be the 76.4, roughly at 30.92, but the lows I want to focus on here would be the 26.30 as the significant ones. And if you put in 26.30 within this level, we can take a look at some key levels, roughly 32 and change would be the next one, and breaking below that would take us mainly towards the 30. And then the 31 and a half is very significant previous resistance and the big Fibonacci level. And the resistance, of course, is back in here. And that is the upside Fibonacci using the $4 and $8 level that I've talked about on so many different occasions. Now, the likelihood I think that we do have a test to below here, at least before we get above the 37 level. I think there's a better chance we go to 31 before we head up to 37 right now, but that's still tough to state that it will definitely be for sure that we're going to be going lower. Just a lot of markets are selling off right now, and the path of least resistance is lower on so many different time frames. Now in here, earlier today, the market got back above 35. And what was interesting is whenever you have a situation where you have a big level between a high and a low, which one are you going to take out? Well, we have a significant high in here and a significant low here. Neither one of them has been taken down as of yet, but right now it got above this level, and really that's nice and dandy because you're breaking the range that you were in, and you really needed to hold probably around 34 and a third to really give that rally much conviction. So oftentimes from a failed move can create fast moves in the other direction. And a fast move would be a move down to this previous test, which is roughly around $33.60 per ounce. Now, finally, the same chart, just using it by the line chart, there is a declining 5-day moving average. Ever since it moved lower back in here, it has not been tested as of yet. It doesn't have to be tested for the bear market to be in full throttle. And I say bear market is that for an intermediate term level. This significant Fibonacci hit yesterday morning was a successful test, comes back up to the other Fibonacci level where it has found resistance. The more often you test support, the more likely it is that it'll be taken out. So the test of 35, which was tested in here, here, and now again there's been so many tests that the likelihood of having another test in here would definitely be coming into play. So I'd like to thank you for watching this video. The blog will be updated at 5 o'clock now rather than 4. And have yourself a magnificent day. Bye-bye.